Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is February 20th, 2026, and we're diving into the latest earnings report from Array Digital Infrastructure. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Array Digital Infrastructure has had a transformative year, and I'm excited to discuss their fourth quarter and full year 2025 results.
Revenue and profitability overview. Let's start with the top line. Array reported a significant increase in their fourth quarter revenue, reaching $60.3 million compared to $26.1 million last year. John, what drove this impressive growth?
The growth was primarily driven by a 51% increase in site rental revenues and a 47% rise in colocation applications, excluding T-Mobile. This indicates strong demand for their tower operations and successful integration efforts.
And what about profitability? The net income for Q4 was $41.4 million, with an adjusted EPS of 48, beating the forecast of 32 cents. How did they achieve this?
Array's profitability was bolstered by strategic divestitures and special dividends, such as the sale of spectrum assets to AT&T and T-Mobile. These moves not only provided immediate financial gains, but also streamlined their operations for future growth.
Strategic initiatives and divestitures. Array has been active in strategic divestitures. Can you elaborate on the impact of these moves, particularly the special dividends and the recent AT&T transaction?
Absolutely. The sale of wireless operations and spectrum assets to T-Mobile resulted in a $23 per share special dividend, while the AT&T transaction closed in January 2026, adding a $10.25 special dividend. These transactions have not only provided immediate cash flow, but also positioned Array to focus on its core tower operations.
Looking ahead, Array has issued guidance for 2026, with expected revenues between $200 and $215 million. What does this indicate about their future prospects?
This guidance reflects confidence in their ongoing operations and strategic focus on tower tenancy and spectrum monetization. It suggests that Array is well positioned to capitalize on the growing demand for wireless infrastructure.
Operational efficiencies and future outlook. John, let's talk about operational efficiencies. Array managed to decrease their operating expenses by 6% in the fourth quarter. How did they achieve this?
Array's cost-cutting measures, particularly in selling, general, and administrative expenses, played a significant role. They reduced these costs by 35%, which is a testament to their focus on streamlining operations and enhancing profitability.
And what about their future outlook? CEO Anthony Carlson mentioned priorities like T-Mobile integration and spectrum monetization. How do these align with their strategic goals?
These priorities are crucial for Array's long-term success. The T-Mobile integration will enhance their tower tenancy, while spectrum monetization will unlock additional revenue streams. Both initiatives are aligned with their goal of becoming a leading player in the wireless infrastructure space.
Key takeaways. In summary, Array Digital Infrastructure has delivered a strong performance in Q4 2025, with significant revenue growth and profitability. Their strategic divestitures and focus on core operations have set a solid foundation for 2026. John, any final thoughts on their investment prospects?
Array's strategic initiatives and strong financial performance make them an attractive investment, especially with their focus on expanding tower operations and monetizing spectrum assets. Investors should keep an eye on their execution of these plans in 2026.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Array's performance in the comments below.